David Green joins me now. He is the host of the Bigger Pockets podcast and author of the book, Skill, a top producing agent's guide to earning unlimited income. That sounds pretty good to me, David. All right, so let's talk about these mortgage rates. They have hit their highest level since 2009. The Fed is hiking interest rates. Home buyers are worried. What do you think is on the horizon?
Well, we know that we have more rate hikes expected. We've been told that. So it's not a surprise that this is happening. Those of us that are in the industry have known for a while that rate hikes were coming. So I would expect this to continue in the future. Unfortunately, I don't think it's going to have the effect that most people are hoping for, which is lowered home prices. Real estate's always local, so it depends on where you live. But the supply demand problem is much bigger than something that just an interest rate hike can fix.
So expand on that a little bit more, why you think it won't drive down the prices, more of your thinking behind that.
Yeah, so in a perfect world, if supply is even with demand, when interest rates end up going up, what that does is it actually decreases demand because homes become less affordable. But in our world that we're living in now, we have such a huge discrepancy between how much demand we have for homes and the supply that we can actually provide. Interest rates may lower demand a little bit, but it still keeps such a big difference between the two. We have a huge housing shortage. And so what I'm anticipating is that for those that are sort of on the lower end of the economic spectrum who could barely afford to get into the market, this rate hike is going to take them out of the game. But for those that already have wealth, that already have equity in other properties that are doing 1031 exchanges, or who have sizable amounts of wealth that they want to protect from inflation, they're still going to be buying real estate. And I don't think that there is enough supply to keep those people happy. So I don't see prices coming down in those specific markets.
All right, so let's talk a little bit more about this in a more granular sense. Just given the extra debt burden, what advice would you give a first-time home buyer who is still going to try to break into the housing ladder?
Yeah, I think this is a great time to be doing that. I'm still buying houses myself. I'm buying them pretty frequently. The tricky scenario is that as a first-time home buyer, you probably don't have a ton of money. You're not as comfortable with real estate, and you're worried about if your income is going to stay strong as inflation makes everything that you want expensive. The other issue is inflation in general is driving up the price of these homes. So even though the money that we have isn't worth the same as what it was, the price of the home keeps going up, giving the impression that you're creating wealth, even if you're not necessarily doing so because your money's becoming worth less. So it's created this sort of dual-headed snake where yes, you have to be investing in real estate if you want your money to keep its value because inflation is eroding it. But investing in real estate becomes a little more scary because the prices are getting higher. So what we've come up with at Bigger Pockets is this concept called house hacking. And it's this idea of buying a primary residence that you're going to live in, but renting out parts of that home to other people. This could be converting a garage. It could be having an ADU. It could be renting out the basement of your home while you live upstairs, or some people even do it by the room. But when you do this well, you end up owning a house, but your tenants are paying the majority or all of your mortgage so that everybody gets cheaper housing.
That seems like a very reasonable plan right there. So you mentioned this earlier, just about those people who have built fortunes off of real estate, who have invested in real estate. Sounds like you're an investor in real estate. But with inflation so high right now, is property the best way to invest your money?
Real estate typically does incredibly well in an inflationary environment, maybe the best asset class that you can come up with. So with more and more inflation on the horizon, I'm actually dumping more money into real estate. So I'm conducting a 1031 exchange myself where I sold a bunch of properties in areas where I don't think that we're going to have as much appreciation. And I'm reinvesting that money into areas where I think we're going to have a bigger run up in both rents and prices because I'm expecting inflation to be pretty rough. Like as we've seen, it's already starting to affect us at the gas pumps. It's affecting us at the grocery store, and assets that produce income like real estate are being affected significantly as well. So when I see this coming, when I see, hey, my money's going to be worth less than inflation is coming, I actually want to be buying more real estate.
That's really interesting. Definitely making me think as well. Really quickly, I want to get your take on what economics professor Justin Wolfers told me last night.
You can make mistakes in either direction. So it's just as likely the Fed won't move that hard, won't move that fast, and in fact the economy will keep motoring on a little too quickly. So the point here is simply that the balance of risks is remarkably balanced right now.
So if the Fed doesn't move hard enough and things keep spiraling, what does that mean for the housing market?
Well, it will have a significant impact in areas where the demand and the supply are roughly even. You're going to see prices come down, or at least the market slow down in those areas, because if people can't afford to pay the same for the house with rates going up, there's going to be less demand. But real estate is very local. So I live in the California Bay Area. There are not enough homes here for the people that are moving here. We also see a big shift in population into the southeast. The developers are putting up houses as fast as they can over there, and they're trying to sell them. Areas like Idaho, Montana, Arizona, they're exploding as Californians and New Yorkers are going into those areas. So something like that, you're not going to see prices come down just because rates went up. Inflation is going to make them go up even higher. What I'm cautioning people about is that there are some folks who live on fixed incomes where they're not going to be getting raises consistent with inflation. So even though we see the price of these really desirable assets like real estate increasing with inflation, some people's wages are not going to. But yet the food that they need to eat, the gas that they need to buy, their utilities, those things can all be going up. So if you're going to be investing in real estate, you want to make sure that you're doing in an area where your tenants can actually afford the rent, even as inflation eats away at their purchasing power.
Okay, 15 seconds. What would you suggest if someone is trying to figure out what to do with their money, to invest it in real estate or to invest it in the home they live in to make their home increase in value?
I think that you buy a new house and you house hack it. So you get a home, you rent out rooms, you make affordable housing for other people.
All right, David Green, thanks so much. Great having you on the show. Learned a lot listening to you, and that's always the hope with these conversations. Thanks so much. His book, Skill, a top producing agent's guide to earning unlimited income, is out now.